A promising stock for 2025 is Lending Club with the ticker C. Now we have also reported on Upstart Holdings, which I have had in my portfolio for quite some time. Recently, however, I sold at the huge price peak of the last few months. However, Lending Club seems to have further potential for growth. Now, it's interesting to know that the stock has strong momentum. A number of price targets have been set. Now, the current price is around 17. The Morningstar fair value estimate is estimated at 16.3 stars. That is why analysts from Wall Street are giving a buy signal. They expect the price to rise a bit. Why would you want to invest in Lending Club? Well, I think especially in the short term, because it could benefit from strong growth in loans and due to the higher interest rates. But Lending Club has also secured a major deal with several banks, and that will definitely boost revenue and possibly profit significantly in the short term. There is quite a long history, and especially with the painful long decline, we look at the forecasting with the price to earnings ratio that seems high at first glance at 37. Could that maybe be okay? Why? Because the current EPS is so low that an EPS growth of, for example, 90% can be achieved quickly. And also for 2026, the estimates are relatively high. What could that mean? Let's assume that the price to earnings ratio is around 21 in 2 years, then you have a potential average return of 25% per year. So it's quite interesting, and there are a number of interesting characteristics about Lending Club that would make you want to investigate this company further. Note, investigate further. Now, one of the reliable tools we've been using for years is from Seeking Alpha with their quant data rating. Check the description of our YouTube channel and our YouTube videos for a special link with a big discount on this program, and also see other potentially interesting discount links for the tools we use. Now, why is the stock interesting? Because it scores high on valuation, growth, profitability, momentum, and revisions. And we particularly see from our experience with this tool that if the momentum is strong and revisions are an A+, and the valuation is still okay and growth is good, then you often see a stronger price increase, but it's not 100% science, of course. If you look at the current valuation, it seems a bit high. The PE ratio is not provided, but for non-GAPI it's 2, which isn't interesting. The price to earnings ratio of 830 is also a bit on the high side, but for example, the price to sales ratio is still relatively low. The EV to EBITDA is also not too high at all. And look, the company also has a relatively smaller market cap. It's still a small cap, just under 2 billion. It also has almost no debt. Well, a lot of cash. So yes, that's a very important factor to consider in your valuation when 50% of the market value is in cash. However, of course, it's a financial company, so you need to study the balance sheet and finances carefully. If we look at the growth rate, you might think, hey, B+, how can that be? Here you see all the less positive figures for next year. Well, it does have to do with the expected EPS growth, which is set to rise significantly in the coming period. Time will tell. Also, make sure to check those investor presentations and the annual reports carefully. Never buy without that information. The current margins are not that impressive at all, but this is where the opportunity might actually lie, because Lending Club has closed a number of big deals with banks, and Zexrank also thinks it's a strong buy precisely because of those deals and the strong momentum in lending, higher interest rates, which could lead to increased profitability. Yes, it might actually look better. By the way, the price stock from Zexrank is $19. It's slightly higher than the current price, but at the moment it's very strong. Within our stock alerts, we've been seeing LC coming for a while. We also reported at the last buy signal. We share a buy and sell report every week for more than 500 stocks. You'll find it on our website. Since the last buy signal, it has risen by about 100%. We wouldn't have bought at the first buy signal, but definitely at the third one, because we see that the underlying momentum has been getting stronger. And if you look at the long-term history, the price could still rise considerably compared to 2021. But 2021 was a period of significant overvaluation. So how far the price can actually rise, we don't know for sure, of course. If you maintain the price from 2017, the stock could almost double. If 2017 holds, then the stock could still almost double. So there seems to be potential for an increase from multiple perspectives. The momentum is very strong. Growth figures can be impressive, especially the EPS growth. So there might be something to gain here with Lending Club, but invest wisely and only in companies,